Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 11th of January here in 2022. We continue the uptrend in the market for the time being, which is a series of higher highs, higher lows. Even the small wiggles and squiggles or swings in the market are playing out with this bigger picture in mind. We'll show the weekly chart in a moment, and we'll take a look at some of the stocks that are outperforming the market, and there's some notable names in there. And also notable ETFs, which we'll again discuss in a moment. But right now the market appears to be playing up off that 4,600 level, which isn't as significant on the daily chart. It's just basically a trend line, and that's over here on the daily chart, but I think it is a little significant on the weekly chart. So let's take a look at that. And just playing off probabilities and asking a question, will this time be different, or are we going to have a similar outcome to the past? Each time that a similar outcome, and let's define that. An uptrending market, this would be true for stocks, it could be true for anything, but an uptrend has higher highs and higher lows. And we have moving averages, not because they're anything special, there's just an average of the price over that period, and the green line is the 20-period exponential average. It just takes the price and averages it over those periods and gives a little bit of structure. And if we call the rubber band snapback plays, that does become targets on the way down from the upside, but it also becomes buy-in points on the way up. So let's talk about same or different. And just prior examples, we'll draw that there. Prior examples would be in September, and let's define that as the market pulling back to the 20 exponential. And we have a probability. Will it go and make new highs, or I think for my purposes, retest the high, trade up to the high, or is it going to break and shatter? This would be the reversal. Of course, that would be this time is different, and this would be the continuation, or up to new highs, so reversal or continue. And just making it all so we're on the same page. It would be the same logic in the other indices, but we're looking at the S&P futures. So will it be different? Has it been different yet? Not really. Not since 2020 when the market came up off those March and April lows. So this does give a probability framework. So let's discuss that in the SPX, which is our S&P 500. And that level, again, is going to be about 4,580. And this time continues the uptrend. We'll do that here. Mainly looking for a retest of the high. Retest of the high. And that's your levels to play. Retest, retest, retest. Now, is that happening outside the S&P? We're talking big picture here. It's a weekly chart. And the same logic on this is the Dow, this is the Nasdaq, sorry, the Nasdaq futures. And we have similar logic because the Nasdaq and the S&P tend to be more similar than not. So again, that parameter is bounce to retest, bounce to retest, bounce to retest, bounce to retest, and then of course that becomes the question mark. And they're in our trades. The Dow Mini Futures, similar logic for it, and that is, not to belabor the point, but that's their pullback, push up to the high. The Russell's been the one that's been a little different because it on the weekly chart is structured as a sideways trading range. So we don't have those moving averages, they're flat. And in a flat market, moving averages are really good for trending environments, not so good for range. And that's what the Russell, the RTY, is. It's a range. That means that the upper resistance is about 23.25, 23.50. The lower support, 21.25. Just think about that as a support bounce level. And we're not talking about moving averages here. We're talking about bounce and reversion to the mean. If the mean is about 2250, we have the same logic playing. Let's just go simple math. 2350 and then 2150, and these again are short term. That's my world, short term trades. Sometimes the market busts up but then is pulled right back to, think about gravity or the midpoint, like an average. That's in the Russell. Let's, while we're on the topic, on the weekly chart, just take a moment. I don't normally do this on the weekly at the videos, but we'll do it for today's session. Crude tends to trend alongside the stock market. And it's had its own series of uptrend bounces since 2020. And remember the crude oil market, just to underscore the point that anything can happen in the market. One of those near-term contracts traded negative, and the broader, this is a continuous contract, went down to $5 per barrel. So anything can happen to the market. That's where risk and options and spreads and not betting our entire account on any one position, bull or bear, and of course mitigating risk with spreads, not betting on or bet the farm on one position. Risk control is definitely key. Just a reminder. So crude's going up to that top, same logic, except these swings are a little bit bigger. Retest, retest, or retest. Now the bond market is where we'll see differences. We'll look at ZN. And ZN had a break, or the uptrend continued throughout 19 and 20. But as the equity market, the stock market made those all-time highs, the bond market traded down. And that means the yield traded up. So the bond market on the weekly chart is in a downtrend. We have lower lows, lower highs, and a falling moving average. And we'll just kind of peek outside the market just quickly. The financial sector is where the action is this week. Two things. Financials and energy are, energy is not all-time highs, but it's getting up there in new 2022 highs. Being at new 2022 highs, that's going to be a new 52-week high. Speaking of 52-week highs, what does our scan for today's session show? Where the equity market's not there, but some of the ETFs are. That includes energy and financials. So which names in our scan on the market cap list, or sorted by market cap, are making new 52-week highs? Might not be surprising to note that they are, in general, energy stocks and financial stocks, at least in today's session, the 11th of January. Top of the list, just by market cap, would be Exxon Mobil, then Chevron, Texaco Chevron Corporation, Wells Fargo. Those are financials with Morgan Stanley and ConocoPhillips and others, which you can look down the list and pause the video and see each of these 27 names that made 52-week highs. And we'll actually pull the weekly chart up because we're on that time frame. Exxon Mobil, like the weekly chart, or like the financials, or like the energy chart, not all-time highs, but that is a 2022 high. And that strong stock is getting stronger. We'd expect Chevron Texaco to be similar, although it's a little higher on its weekly chart. We then had Wells Fargo, which is again, financial company, or there's CVX. Then we'll look at Wells Fargo. There's Wells Fargo. Similarly, in a sideways trading range, not straight up. And let's compare something. Something straight up would be like Costco or Microsoft. Those would be really, really strong weekly trends, but that's not happening in some of the financials and energy names that are playing catch up to an extent. Now, Morgan Stanley is the first of our list that are making new highs that have a persistent, longer term weekly chart uptrend. And we saw CVS, ConocoPhillips, and the list goes to smaller cap names. And these names just help us to find candidates that are strong and might get stronger. So if you pull back to the daily chart of some of the names, there's ConocoPhillips pushing to new highs. We'll just go down the list quickly. There's a range that resulted in a breakout for Exxon Mobil, and similarly for Chevron Texaco. Range breakout, range consolidation, range expansion. Wells Fargo is the range contraction breakout, more of a creep to the upside trend in financials. And we'll finish once again by looking at the daily chart of the general, or the broader financial indice, the financial ETF, XLF. And right behind that is, again, XLE. In 2022 so far, these sectors have been just about every day in the new year straight up. Counteract that with the technology sector, which is in just about every single day straight down, except for yesterday and today. And that's a little bit similar in the Y, which is discretionary. So that's a look at the broader market, a little bit of a weekly perspective to start off the new year, and quick comments about the price levels and the potential play to retest out those highs in the general sense, and the stocks or the ETFs that are outperforming the S&P and the broader markets. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for January 11th, 2022.